Hello everyone and welcome to another Midweek Technical Outlook here at xm.com. Today we will be looking at the US100 index, which is currently consolidating after experiencing its worst two-day drop since October, following the tech sell-off on AI disruption fears. We will also be looking at Bitcoin, which is currently also experiencing and extending a major sell-off to over one-year lows. And also we will be looking at oil, which has also dropped following easing geopolitical tensions between the US and Iran. Now let's start with the US100 index, which is currently trying to find footing on the long-term uptrend line drawn from August lows. It has experienced a sell-off of over 1.5%, which has pushed the price below both the 50 and 20-day SMAs. However, the positive bias still holds as long as it remains above the 200-day SMA and the uptrend line. So should it rebound from the 24,700 level, where it is currently consolidating, then immediate resistance might come from the 25,000 psychological mark, followed by the 25,329, and then the 20 and 50-day SMAs in the 25,500 area. Now to the downside, immediate support might come from the 24,700 level, followed by November lows near the 24,300 level. The momentum indicators are reflecting the selling pressure, with the MACD still below zero in the red signal line and the RSI flatlining below the 50 neutral threshold, which is indicating that downside risks do remain intact, especially following the sell-off. And looking at the bit broader picture, the US100 index attempted to retest the record high earlier last week. However, it is extending an over 5% pullback since those attempts just within 1 week. So let's also have a look at Bitcoin. Bitcoin is currently extending a major sell-off from the of over 20% from the 50 and 20-day SMAs. It has dropped to levels of a 15-month low near the 70,112 level, which was last seen in November, 6th of November of 2024. So the bearish bias is very strong for Bitcoin, as also reflected by the momentum indicators, with the MACD overextending to the downside below zero and the red signal line, and the RSI in the oversold territory, showing no signs of reversal for now. So should the price action resume to the downside, then levels, deeper levels from November of 2024 might come into view, such as the 66,800 and the 65,265 before it reclaims the 60,000 psychological mark. Now to the upside, should it rebound from the 70,000 level, which is a 15-month low, then immediate resistance might come from the 74,576. Followed by the 78,350 and higher up from the November 21st swing low near the 80,615. Now let's also have a look at oil. Oil is currently consolidating, dropping from the 64.70 level after 2 days of sustained upside above the 200-day SMA. So should it resume to the downside, immediate resistance below the 63.15 level might come from the 200-day SMA near the 62.72 level, followed by the 20-day SMA near the 61.90 level. And further below, it could find strong support near the 60 psychological mark. Now to the upside, immediate resistance might come from the 66.60 level, which is a level touched on the 29th of January, followed by the 68.45 level, and higher up the 71.40 level, marked by July highs, which would fully retrace this pullback. Now, the outlook for oil is positive. It is above all three key plotted SMAs and the uptrend line. The momentum indicators are also reflecting the bullish bias with the MACD overextending above 0 and the red signal line, and the RSI above the 50 neutral threshold. Now that's all for today's market wrap. Thank you for watching.